Well, markets take a pause ahead of the Fed meeting, but the bullish case for markets seemed intact for three reasons. It's not the case for oil, though. Oil hit its lowest level in 4 years overnight. My name is Jessica Amir. It's great to have your company for the daily. Happy Tuesday, this 6th day of May 2025. It's good to be with you. So the bullish runway for stocks perhaps seems to have got a wider berth overnight, but the S&P 500 fell for the first time in 9 days. Why is that? Well, basically investors are catching their breath, taking profits off the table just in case the Fed's commentary upsets the investment world's apple cart on Wednesday. And if we see the Federal Reserve hint that there's no need to cut rates, that would spook markets. That's why people are taking some profits off the table. But lest we forget, markets don't go up in a straight line. The S&P 500, it's still up. In a bull market, it's up 14.2% from its low. The Nasdaq 100 is up 19%. Stocks like Palantir up 86% from that April 7 low. And the locally listed Life360, that's been doing really well too, hasn't it? That stock is up 42% from its low. So well done to you if you invested in Life360. We're showing the locally listed version on the screen at the minute. So the case remains that stocks can continue to charge for three major reasons, as we said yesterday. Now, what is that and why did the plot thicken? Well, tariff deal hopes are increasing, company earnings are growing stronger than expected, and the economy's legs are getting stronger. So the health of the stock market is indeed improving. Now, this scenario improved overnight. How so? Well, firstly, we saw US Treasury Scott Bessent give his Bessent blessing. He basically said trade deals could come as soon as this week, so that's good news. Secondly, why stocks expected to continue to rally on up? Well, inflation concerns are falling, and as we said at the outset, oil fell to its lowest level since 2021 overnight. Our oil is now down to $56.90, and OPEC is pushing ahead to basically increase oil production while demand is slowing, and obviously you know what that equation does to prices. And also at the same time, we've got the safe haven of the US dollar falling to fresh lows, and that's why gold has moved on up to fresh highs. And adding into the mix, speaking about why the bullish scenario is intact for stocks, we also got new data overnight, basically showing the US economy is in better shape than forecast. We saw that with three key reads: ISM services, new orders, and employment data out from the ISM surveys overnight. So a trifecta there. As for stocks in the mix to consider and watch, as we said, oil fell. It's fallen 18% in April. That's its biggest monthly drop since 2021. Oil prices are now down 19% this year, falling to their lowest levels since 2021. More downside is probably ahead, though, for oil, and that's because supply is rising while demand is falling. So keep an eye on stocks like Occidental Petroleum. We've spoken about Occidental Petroleum before. Remember that this is tightly held by Warren Buffett's Berkshire Hathaway. Now, Occidental Petroleum, their shares basically are gapped lower overnight. We're not showing this on the screen, but if you have a look at the candlesticks on Mumu's platform, you would see that Occidental Petroleum gapped lower. That's basically a bearish technical signal suggesting that more downside could be ahead too. Now, to say this differently, this scenario, I'm again painting a picture of more downside for oil. Why am I saying that this is the case? Well, remember, 8 OPEC producing nations led by the Saudi Arabian region are increasing oil output by another 411,000 barrels per day from June, basically meaning that there's an extra 800,000 barrels of oil per day in extra supply in the oil market over 2 months. Now, this is why investment banks are cutting their oil forecasts. Goldman Sachs cut their oil forecast by $3 overnight, saying it'll get to 56 bucks by the end of the year. That's where oil is by the way now. UBS also cut its oil forecast too. Now, flowing down, let's remember that you also do have other companies that this flows onto. It's not just affecting oil companies like we're displaying on the screen. It's service firms like Baker Hughes, locally listed. Don't forget you've got Worley Parsons. Now, these companies should be expecting less investment in exploration and production to fall. That's why their profits would be expected to fall. So again, just another way to think about when you are seeing a lower price, it affects many other companies. What other companies are in the mix? Well, we're showing Occidental Petroleum on the screen, but last week we also heard from Chevron and Exxon. Their quarterly earnings fell compared to the same period due to lower oil prices. But keep an eye on Occidental Petroleum. They are reporting results ahead. Now, the tale as old of time is that the Aussie share market typically follows the US. Whatever it does, the Aussie share market follows. But today, the futures are indicating that our market probably won't fall as hard as Wall Street fell overnight. And that's because we are expecting good news today from gold stocks. However, bank stocks are expected to come on the nose. They have had a cracking rebound, though. We've been speaking about that of late. So well done to you if you bought into the lows of bank stocks, which have indeed strongly rebounded up off their lows. But we are expecting building approvals to essentially fall off a cliff today. That's according to the consensus estimates. So keep an eye on bank stocks like Westpac, National Australia Bank, CBA and ANZ. Also, if you don't want to get stock specific, down and dirty, keep an eye on the MVB ETF. That looks like it's standing on the edge of a cliff, so to speak. So maybe it'll jump off a cliff if building approvals jump off a cliff. So is this an opportunity for you to take profits off the table? That's something that you need to answer yourself. So while bank stocks look like they may be heading potentially lower, gold stocks are expecting a brighter future. So the gold price moved up markedly higher overnight, jumping 3%, perhaps indicating the longer-term uptrend is intact for gold. Now, why is this? Well, obviously several reasons. We've got uncertainty continuing. China said that there's no trade deal in sight. The US thinks there is. But now the technical indicators are suggesting that gold could get from $3,322, where it is now, to $3,600. Now, obviously, a higher gold price means that gold producers will see higher profits, and their shares over the long term could continue their bullish run. So do keep an eye on the stock that we just flashed on the screen, Newmont. Newmont, the biggest gold producer in the world. Their shares are one of the best performers in the US overnight. You'd be expecting them to follow suit on the ASX today. Other gold producers to watch, obviously, Gold Road Resources, Bellevue Gold, Evolution Mining. They were three of the best performers locally on the ASX yesterday. There's always plenty to consider. There's always a bull market somewhere. Stay safe, happy trading. It's great to have your company. We'll see you tomorrow.